A very good day to our Dr. Shamharid. Today we would like to present you for the subject Audit and Assurance 2 for the topic titled Inventory Cycle. So before we proceed to our presentation, I would like to introduce our members first. First is Nur Aisha, second is Siti Noraza, third is Nuri Naja, fourth is Divya Darshini, and last is me, Yugashwini. What is inventory? Inventory includes both the raw materials needed in production and finished products that are offered for sale. In this report, we will discuss inventory auditing by identifying the audit objectives, understanding the nature of inventories, explaining the business functions, and describing the fundamental control procedures. Furthermore, we will identify the design test of controls and the substantive test for inventories throughout the inventory audit. There are three types of inventories, which are raw materials, work in progress, and lastly finished goods. The objective of inventory audit is to compare and contrast the physical count of the inventories with the financial record of those inventories. Another one is that inventory audit makes sure that these errors are avoided and that the audit is carried out correctly to give an accurate and impartial picture of the organization's inventory position. The quality or conditions of the inventory, which is not included in the financial records, is also verified or cross-checked.
Hi, my name is Aisha, metric number 281528. So I will talk about the nature of inventory. Inventories are typically a significant portion of total assets, particularly in manufacturing firms. Inventories include manufactured goods for sale, work-in-progress goods, supplies, and goods used in the production of goods and services. Inventory auditing is essential for every business. The process entails determining whether or not the value of inventory appearing in the entity's book is actually present with the entity. Some considerations should be made by the company when performing inventory audits internally or while hiring external auditors. These factors include whether the company's inventory can be physically counted by hand, whether the inventory is stored in the company's warehouse or a third-party facility, and whether the audit can be conducted at the appropriate time. This consideration will aid in determining the audit procedure and timing. Entities that keep detailed inventory records can use them to calculate both the quantity and the value of their ending inventory. Auditors should perform test controls over recording and maintaining inventory records, observe evidence from existing inventories, and verify the cost and net realizable value of inventory.
My name is Divya Subramaniam, metric number 284666. Today I would like to present about the accounting system and control activities of the inventory cycle. The accounting system and control activities for audit of inventories relates to the audit of purchase. There are 5 accounting systems and control activities. First is recording the movement of goods into inventory. Recording the movements of goods into inventory starts with either good received from suppliers and prepare good receipt note as well. The quantity and cost are appropriately recorded in the GRN to ensure the occurrence and completeness of inventory. Next is recording the movements of goods from inventory. Recording the movements of goods from inventory starts with either goods requisition from departments or sales orders from sales departments. The control procedures relate to occurrence and completeness of inventory. Following that, recording the transfer of inventory. Inventory transfer requisitions are normally prepared by the requesting department, and the document should be pre-numbered and properly approved by authorized personnel. The control procedures relate to occurrence and completeness and of internal comparisons of inventory with inventory records where are performed periodically to ensure consistency of the records. There are 2 functions involved in the comparison, which are stock take and comparison with inventory records. Last but not least, maintaining records for inventory costing. Proper calculation and control should be placed in a manufacturing entity to ensure inventory cost is recorded at proper values. The entity should establish an accounting policy to record inventory costs consistent with the requirements of MFRS 102 of audit objectives.
Hi, my name is Raza Venture and Faith. My metric number is 280312. Today I want to present about developing the audit plan. They have a risk assessment procedure, which is understanding the entity to identify risks, obtaining and understanding internal control over the inventory, assigning risk of the material misstatement, designing further and understanding of the internal control over the inventory, determine if the internal control over the inventory are implemented appropriately and effectively. Audit may observe, make a query for further detail from management and inspect documents and perform a state to determine whether the quantity and the value of inventory are appropriately recorded. Next, assessing risk of material misstatement. The audit assess the risk of material misstatement, inherent and cost risk. The audit may then determine whether the inventory is susceptible to designing of further audit procedure. Further audit procedure comprise of test of control and substantive procedure. Audit should determine the test to be performed based on...
Assalamualaikum and good day. My name is Nurina Jah binti Muhammad Rafai, metric number 280830. I will continue with performing further audit procedure in inventory cycle. In performing the audit procedure, test of control and substantive procedure need to be done to ensure that the audit evidence are reliable and can be considered as material. The first one is test of control. Test of control consists of test of design effectiveness and test of operating effectiveness. This is to make sure that the existence of inventory of company align with valuation of assets to avoid the overstate. They need to organize the inventory by numbering all locations, identify each inventory item and tracking them by location. Second step is count and inspect all incoming inventory as they need to clarify the quantity received and inventory stated by the supplier are correct. This also will avoid errors by passing to the inventory record. Then, they need to tag all inventory by tagging them with part number, description, unit of measure and quantity. Lastly, move on to segregation of customer-owned inventory since all the types of inventory are all in the warehouse. By segregating the inventories, a customer's inventory can be identified. The purpose of this procedure is to obtain the appropriate audit evidence that inventory is not overstated can be proven. It can be done by performing an initial procedure, test of details of balance, analytical procedure, and test of details of transaction. For example, initial procedure can be applied on inventory balance and further testing like trace the opening balance to prior year's working paper. The test of details of transaction, as such, auditor can test the entries in inventory record to and from supporting documentation. Other than that, test of details of balance, such like observing the entity's physical inventory count. The auditor can also evaluate the adequacy of entities' inventory taking plans. The employees are obligated by inventory protocol to verify that the goods they really have on hand match with their record. The crew is frequently divided into teams by management and each team is given a section of material to count. This substantive procedure helps the auditor to know that the store has an accurate amount of inventory that can be sold to the customer.